network futures and user data all point toward Ethereum potentially charting a new course. Ether price has been dealing with some strong headwinds, and on September 11th, the price of the altcoin endured a critical test when it plunged to the 1530 support with level. In the days that followed, Ether managed to stage an impressive recovery by surging by 6%. This resurgence may signal a pivotal moment following a month that has seen ETH endure losses of 16%. Even with the somewhat swift recovery, Ether's price performance raises questions among investors about whether it has the potential to climb back to 1850, and ETH derivatives and network activity might hold the key to this puzzle. Macroeconomic factors have played a significant role in mitigating investor pessimism, given that inflation in the United States accelerated for the second consecutive month, reaching 3.7%, our customer period, most recent CPI report, and so that such data reinforces the belief that the U.S. government's debt will continue to surge. Scarce assets are poised to benefit from the inflationary pressure and the expansive monetary policies aimed at bridging the budget deficit. However, the cryptocurrency sector is grappling with its own set of challenges. There's a looming possibility of Binance Exchange facing indictment by the U.S. Department of Justice. Furthermore, Binance's U.S. has found itself entangled in legal battles with the U.S. Securities and one of the Exchange Commission, leading to layoffs and top executives departing from the company. Besides the regulatory hurdles faced by cryptocurrencies, the Ethereum network has witnessed a notable decline in its smart contract activity, which is at the core of its original purpose. And the network still grapples with persistently high average fees, hovering above the $3 mark. Over the past 30 days, the top Ethereum dApps have seen an average 26% decrease in the number of active addresses. An exception to this trend is the Lido Success liquid staking project, which saw a 7% increase in its total value locked in ETH terms during the same period. It's worth mentioning that Lido's success has been ministered to fire in the PA's child of Cycle. But Cycle is related to strand of the acceleration. One of the aim of the project's to minister. Vitalik Buterin, co-founder of Ethereum, has acknowledged the need for Ethereum to become more accessible for everyday people to run nodes in order to maintain decentralization in load time. However, Vitalik does not anticipate a viable solution to this challenge within the next decade. Consequently, investors have legitimate concerns about centralization, including the influence of services that owe. A look at derivatives metrics will better explain how Ether's professional traders are positioned in the current market conditions. Ether monthly futures typically trade at a 5 to 10% annualized premium, the situation known as contango, which is not unique to crypto markets. The premium for Ether futures hit its lowest points in 3 weeks, standing at 2.2%, indicating a lack of demand for leveraged long positions. Interestingly, not even the 6% outgain following the retest of the 1,530 support level on September 11th managed to push ETH futures into the 5% neutral threshold. One should look at the options markets to better gauge market sentiment, as a 25% delta skew can confirm why your professional traders are leaning bearish. In short, if traders they expect to drop in Bitcoin's price, the skew metric will rise above 7%, while periods of excitement typically have a 7% skew. On September 14, the Ether 25% delta skew indicator briefly shifted to a bullish stance. This shift was driven by put-sell options trading at an 8% discount compared to similar call options. However, this sentiment waned on September 15th, with both call and put options now trading at a similar premium.
Essentially, Ether derivatives traders are displaying reduced interest in leverage long positions, despite the successful defense of the $1,530 price level. Interest.
On one hand, Ether has potential catalysts, including requests for a spot ETH exchange-traded fund and macroeconomic factors driven by inflationary pressure. However, the dwindling use of DApps and ongoing regulatory uncertainties create a fertile ground for FUD. This is likely to continue exerting downward pressure on Ether's price, making a rally to $1,880 in the short to medium term appear unlikely.